Hey everyone, Brian Hoops here, Midwest Market Solutions Market Insider, our TV segment, and it is our webinar for March the 8th. I want to thank you for joining us here this afternoon and evening as we take a look at the crop report that came out today. There was also cattle on feed that came out this afternoon. We're going to look at all this information and kind of give you our ideas of what happened with the market here. Typically, the March WASDE report is normally a non-event, and it was kind of a non-event from a fundamental perspective. It did hold an overall theme of demand concerns, which we've been talking about for a couple months now, as the USDA did lower corn and wheat exports and also dropped domestic usage slightly as well. They did not make any major changes due to the U.S. and China trade relations, and that left soybeans virtually unchanged. And so we're still, I think, still in the looking at China from the standpoint that it's kind of wait and see. If China makes some major purchases or makes an agreement, our export profile is pretty close, probably from what the USDA is forecasting right now is spot on. If we don't make a agreement with China, there's just no way we're going to reach the even lowered export profile. So we'll take a look here at what is information, what's going to impact the markets. And of course, we have end of the month grain stocks and prospective planning reports coming up on the 29th. We're going to try and do our longer term outlook webinar that will focus on markets and market strategies going forward here after we get through some of this information. So let's take a look at what happened in this particular report. And you can see this is a chart of U.S. grain stocks. The bearish standout one is corn and wheat as well, but corn at 1.835 billion bushels, that's 100 million above the estimate and 100 million above last month. It's still well down from year ago levels, but the trend is to increase the stocks here on the old crop due to slowing demand trends. The wheat, same thing, slowing demand trends here. We're up 45 million from last month at 1.055 billion for wheat, and as we've talked, it's going to be next to impossible to reach this forecast for wheat. So our stocks are going to be large and remain large, and they're not that dissimilar to what we were last year. Only in soybeans did we cut from last month 900 million bushels. That's still a burdensome number. When you compare it to last year, it's more than double what we saw 1 year ago. As far as a worldwide basis, and this is key, especially for the wheat market, world stocks for wheat, 270.5 million tons of stocks. That's 3 million larger than last month. The corn number is actually a little bit smaller than a month ago and well below last year's numbers. The wheat is actually well below last year, and the soybeans is well above last year, but just a very small increase from last month at 107.2 million tons. All right, let's look at commodity by commodity here. And as I mentioned, I think previously when I started this webinar, we're going to go through this fairly quickly and not take a lot of your time, as this is pretty much a no, excuse me about that. Sorry about that. A no going nowhere report here. Let's look at corn, and we're using R.J. O'Brien's supply and demand numbers, so thanks to them for doing that. Their column here, where my highlighter is, they're actually looking for increased stocks to going forward. USDA today is at 1.835. They think the export number is probably pretty close. Feed is pretty close, but here's the key: is ethanol production is still, the demand is not what the USDA has. There's room for the demand to come down, and that makes our carryout numbers grow. And so as the carryout numbers grow to possibly 1.9 billion, you move that over into the new crop balance sheets, and we're talking new crop, the September, December corn, and farther back months. You're looking at average yield, the expected increase in acres to 91.2 million. You're going to produce 14.7 billion bushel crop. We're not going to quite use that much. About a month ago, there was projections for 14.7 billion bushels of usage. but ethanol demand is slowing, and export business is probably not going to be quite as strong due to increased production out of competing countries such as Brazil and Argentina, as well as the Ukraine. So it's going to kick our ending stocks probably closer to 2 billion bushels. This is more of a burdensome number than what a lot of people would probably like to use. And if you look at the USDA outlook for them, they got 1.65 billion bushels, which I think is going to be very tough given a yield of 176. You're going to have to, these demand profiles, I think, are just too optimistic from what the USDA has. As far as the soybean numbers, here's today's column, USDA on March the 8th. They're at usage of 4.1 billion bushels, but our carryover at 900. There's probably a little bit of room to maneuver this, probably to larger stocks, as demand could be overstated just a little bit yet. Now, China did make a purchase announcement this morning. They bought about 25 million bushels of U.S. soybeans out of this old crop, and so that would make up the difference. So these export numbers likely to be at this area, possibly up into here. I think next week we probably will see one or two more announcements from China as far as buying soybeans, whether they're old crop or new crop, really makes a difference. As I said, that was 25 million bushels this morning that was taken off the balance sheets, and that goes a long way into determining what our carryout numbers are. And if you looked into next year, acres assuming going to be down, we have a huge carry-in number. Our production does decrease just a little bit from the prior year, but our usage is at 4.3. We're still producing 4.4 billion bushels. Our demand is not keeping up with our production. Our stocks are going to slowly build, probably another 100 million over what we have this year. So unless we have a major weather threat that rips apart these production numbers for corn and soybeans, it looks like ending stocks are going to increase for corn and soybeans in 2019 and 2020. Now looking at the wheat, we look at the demand side of things, and our export profile here probably a little bit better than what the USDA indicated today, and that could help trim carryover stocks. But if you look at a little closer here, this feed number is where R.J. O'Brien is making the major change. They're dropping feed usage by 20 million. USDA did make a minor change and adjustment in that today. So they've got stocks at 1.055, RJO's at 1.065, even with an increase in exports. Hard to make any arguments about this. It's not going to make a lot of difference for wheat. But if you look into this next marketing year, even with acres being down compared to this last year, your yield, if we have a good yield, we're going to have a production of 1.9 billion bushels. We're going to use a little bit more than that. So our stocks should be down just a little bit. But boy, this export number could get hurt with bigger crops out of Russia and out of Argentina this year, and that means our exports are going to fall even further. Demand is not going to be as strong, and our carryout numbers probably are going to struggle here. We're going to be over 1 billion bushels this next year. Bottom line for corn, soybeans, and wheat, we've got to have weather issues, weather supply type rallies to try and market into. Otherwise, we are going to struggle. All right, want to look at the cattle on feed report here. And that came out this afternoon, so the market hasn't reacted to it. We did rally going into the report. The actual number was on feed at 100.4%, the little bit above the average guess. Looking at the numbers, it's very close to the average guess, down from last month. It's the lowest year-over-year increase in 23 months, so I can't say that this is bearish by any means. The placement number is a little bit above the average trade guess. It's down from the previous month, however, and it is the lowest since 2016 for January placements. Again, this is a January report that was supposed to be released in February. In 2 weeks from today, we're going to have another cattle on feed report. So I don't think you're going to see a lot of reaction to this report because it's considered old news. The marketing's number, the highest in 16 years. If anything, we're going to react to this number here. Even though it's close to the average guess, it's way above last month. And as I said, the strongest in 16 years. So I got to think, if anything, we have a positive reaction to this, but muted is how I would expect this report's reaction to be come Monday. So really nothing to get excited about in the grains. Cattle should continue to move higher. Question will be going forward here in the grains. I think really the one for corn is wet conditions prevalent across the upper Midwest, cold conditions as we get closer to the end of March and thinking we should be planning. These conditions persist. We could see probably the market try and move a little bit higher, but you've got quarterly stocks, acreage at the end of the month. Going to see probably an increase in quarterly stocks numbers, which will be bearish, but that acreage report could trump everything, I think, going into the spring planting time frame. Otherwise, outlook is, sorry to tell you, it's a little bit negative. Hopefully we get some short covering now that this bearish news is out of the way. Have a great weekend. Brian Hoops, Midwest Market Solutions wrap up for March the 8th, our supply and demand and cattle on feed report webinar. Talk to you soon.